At the moment, the financial market sentiment is fully determined by possible changes in the monetary policies of various central banks. The Fed is among those regulators that may seriously affect the market situation. Thus, on Wednesday, the Federal Reserve announced its decision to raise the benchmark rate by 75 basis points at once. Traders are gradually pricing in such news. They are ready to switch to new events that may shape currency trends. Let us look at these events in detail. On Tuesday, traders will learn that the Reserve Bank of Australia is actively reacting to the current economic changes. At the last two meetings, the regulator made a decision to raise the key interest rate. On June 7, interest rates were hiked by 50 basis points at once. Such a sharp rise was last seen 12 years ago. What's more, the regulator is ready for new hikes in a case of necessity. On Thursday, the report unveiled that Australia's labour market situation favours further rises in the benchmark rate. At the same time, inflation noticeably exceeds the targeted level and forces monetary authorities to take radical measures. Against the backdrop, the Australian dollar may gain in value. On Tuesday, the Canadian dollar will also get a chance to recover against the greenback. Canada is going to disclose its retail sales report for April. The forecast is quite optimistic. It means that consumer activity in Canada is increasing despite high inflation. In the United States, the situation is the opposite, the fact that consumer activity is rapidly falling. The existing home sales data may prove this fact. According to the forecast in May, the indicator declined by 5%. The drop could be explained by high mortgage rates and rising house prices. Analysts suppose that the surge in the real estate market activity is returning to the pre-pandemic levels. It means that the market conditions are becoming common, but investors will hardly appreciate such changes. Thus, sell-offs in the stock market are quite possible. On Wednesday, trading activity will rise after the publication of the UCPI report. The data is expected to be disappointing. According to the forecast in May, consumer prices continued rising despite the key interest rate hike. Thus, analysts foresee that inflation growth may accelerate to 9.1% on a yearly basis. In April, the indicator had already reached its highest level since 1982 amid surging prices of energy, gas and other types of fuel. Notably, living standards of Britons are falling. Canada will also disclose its consumer price index data for May. Inflation may accelerate to 7% from 6.8% on a yearly basis. The reason is still the same: soaring energy prices. Under the current conditions, the Bank of Canada will have to tighten its monetary policy even more. Expectations of another key interest rate hike amid favorable labor market conditions and a quite high consumer activity may boost the attractiveness of the Canadian dollar. And you have watched Forex Trader Calendar on InstaForex TV channel. We wish you profitable trading and see you on Monday.